Hey everyone, welcome back to Corporate Decoder, the place where we decode the language of big business and spill the tea on what it really means for us. So, Federal Home Loan Bank of Chicago just dropped some news on July 23rd, 2025, and let's just say it's a peek behind the curtain of their financial game for the last quarter. And I've got some thoughts on what those numbers are really telling us. Before we dive in, if you dig these no-nonsense breakdowns of corporate filings, smash that subscribe button and, we've got community brewing on Discord where we dig even deeper into these reports. So join us there. Link is in the description. So the big news today is that the Federal Home Loan Bank of Chicago, or the bank as they call themselves, put out a press release about their preliminary financial results for the quarter that ended June 30th, 2025. Now, preliminary might sound a bit iffy, but it's basically their first look at the numbers before everything is finalized. It's like getting a sneak peek at your report card before the official release. Now, I'm going to skip over all the boring stuff like their address and who's signing what, because honestly, that's not where the juicy details are. We're here to talk about what this means for the bank and, by extension, its members and the market. The main event here, folks, is item 202, which covers their results of operations and financial condition. This is where companies tell us how they're doing financially. And for the Federal Home Loan Bank of Chicago, the story here is framed by this press release they put out. Now, they've also included a bunch of what they call forward-looking statements. This is a pretty standard legal disclaimer where they talk about what they expect to happen in the future. Think of it as them saying, here's what we think will happen, but, things could change. And boy, could they change. They'd mention a whole laundry list of things that could mess with their plans. Legislative and regulatory changes, credit market instability, economic conditions, inflation, recession, just to name a few. It's like they're saying, the weather report looks good, but a hurricane could still hit. And honestly, given the world we live in, that's a pretty crucial warning. They're basically saying, the weather report looks good, but a hurricane could still hit. And honestly, given the world we live in, that's a pretty crucial warning. They're basically saying, don't bet your house on these predictions being perfectly accurate. But what really grabs my attention is how they're presenting these preliminary results. They've given us a date, July 23rd, 2025, and the fact that it's for the quarter ending June 30th. That's the second quarter of 2025. And while the actual financial statements aren't detailed in this particular filing, the fact that they're using an 8K to report a press release with financial highlights tells us they see these numbers as significant enough to warrant immediate public disclosure. And what acts as the proof for all of this, you ask? That's where item 901 comes in, which lists their exhibits. The key exhibit here is exhibit 99.1, which is that press release itself dated July 23rd, 2025. This is the document that contains the actual financial snippets they're sharing. Think of it as the trailer for the main financial movie. Then there's exhibit 104, which is the interactive data file. This is what allows the really tech-savvy folks or the machines that read these reports to easily pull out the numbers and get a clearer picture. It's like having the spreadsheet version of the press release. Now, to really get the meat of the story, we need to imagine what's inside that press release. Based on how these things usually work, they would be highlighting key performance indicators, things that show how the bank is performing. We're talking about things like their net interest income, which is the difference between what they earn on loans and what they pay on borrowings. We'd also expect to see information about their loan portfolio, how much they've lent out, and the quality of those loans. And of course, any discussion about capital levels is crucial for a financial institution like this. If we were looking at the actual press release, we'd be hunting for numbers that show growth or decline. For example, if they reported an increase in net interest income compared to the previous quarter, that's generally a good sign, meaning they're making more money on their core lending activities. Conversely, a drop would signal they might be facing headwinds, perhaps due to changing interest rates or increased competition. They'd also likely talk about their liquidity position, which is basically how much cash they have on hand to meet their obligations. Strong liquidity is vital for any bank, especially in uncertain economic times. Let's say hypothetically the press release indicated a 5% increase in their total assets. That would mean they've grown their business, likely by making more loans or acquiring new assets. A 3% increase in their member deposits. That's great news. It shows their members trust them with their money and are actively using their services. However, if they mentioned a rise in non-performing loans, that would be a red flag. It means more borrowers are struggling to repay their loans, which could lead to losses for the bank. A 10% increase in a particular cost category like operating expenses might also raise an eyebrow, suggesting a squeeze on profitability. Think about it this way, if Warren Buffett were looking at this, he'd be asking, are they growing their core business? Are they managing their risks effectively? And are they returning value to their stakeholders? For a Federal Home Loan Bank, stakeholders are primarily their member institutions like other banks and credit unions. So performance that benefits those members is key. A strong financial report for the bank often translates to better services or more favorable terms for its member banks, which in turn can help those banks serve their own customers better. Ultimately, all this information, even from a preliminary press release, is signed off by key executives, like Virginie Johnsonelli, who is the Executive Vice President and Chief Financial Officer. This signature confirms that the information presented, as far as they know at this point, is accurate and reflects the bank's financial standing. It's their official stamp of approval. Now, it's important to remember that this is a Federal Home Loan Bank. These aren't your typical publicly traded companies. They operate with a specific mission to support housing, finance, and community development. So when we analyze their performance, we're not just looking at profit for profit's sake, but how that financial health enables them to fulfill their mandate. Are they lending enough to support housing? Are they providing the necessary liquidity to their member institutions? In my opinion, the fact that they are issuing these financial highlights so promptly suggests they have reasonably good news to share, or at least news they feel is important for their members to know quickly. The emphasis on preliminary also tells us to expect a more detailed breakdown later, likely in their subsequent SEC filings. The extensive list of risks they've outlined is a very mature approach to disclosure. It shows they are aware of the many external factors that can impact their performance and are being transparent about them. While we don't have the specific numbers from their press release here, this 8K filing signals a commitment to transparency and timely communication, which is always a positive sign for any financial institution. The key takeaway is to keep an eye on that Exhibit 99 to institution. The key takeaway is to keep an eye on that Exhibit 99 point, the press release, when it becomes available, as that's where they are aware of the many external factors that can impact their performance and are being transparent about them. While we don't have the specific numbers from their press release here, this 8K filing signals a commitment to... Alright, that's our quick decode of this particular filing. What's your take on what this 8K and the upcoming financial results might signal for the Federal Home Loan Bank of Chicago and its members? Drop your thoughts down in the comments below if you found this breakdown helpful. Give it a thumbs up and make sure you're subscribed for more insights like this, and don't forget to join our Discord community for even deeper dives and discussions. Thanks for watching, and I'll see you in the next video.